Hey, thanks for tuning into the Art of SBA Lending. As you know, I was in Atlanta a couple of weeks ago for the NAGGL conference, and while I was there, I got a chance to sit down with Dustin Baker, CEO and co-founder of Baker Lewis, an SBA advisory firm. They do a lot of recruiting, and Dustin's also the host of the SBA Roadshow, and if you haven't seen that yet, definitely check out season 1 and 2 on YouTube. So we sat down for about an hour to discuss some of the biggest challenges facing our industry, things like burnout, how to retain talent, why people are quitting, and the biggest one of all, how to train new people into the industry. So stick around. I think you're going to like this one. Now, I appreciate you coming on. We're at the NAGGL conference, so you flew in. We're up in my hotel room, and
it's a very fancy hotel room.
Yeah, man, and you're
first class.
You're one of my first ever recurring guests on the podcast too. By the way, that's I didn't think about the idea of recurring guests, but tonight's show has them, right? And that's pretty much where I'm at, right? It's like
I think there's Johnny Carson really, and then you, and then Jay Leno below you.
And where's that put you then? Like, are you like Don Rickles or?
I don't know. Who's that guy that sat on the end of the couch and just kind of laughed and said, "Yes, ha ha ha." Ed McMahon.
Yes, that's right.
Yeah, I think that's me. Well, I appreciate you having me on a second time. I've just been waiting for you to call me back and ask me back on. So it's about time.
Yes. Well, if anyone doesn't know who you are, why don't you go ahead and tell them?
So I'm Dustin Baker, and I own a firm called Baker Lewis, and we do a lot of things in the industry. For the last 13 years, it's been mostly recruiting, a lot of other consulting and talent management initiatives that we've helped our clients with. Do some debt placement. We run a YouTube show called the SBA Roadshow, which you've got a sticker there on your microphone.
I sure do.
Representing the road shows. Appreciate that. So we're just we love this industry, see lots of opportunity in the industry. And so we just try and be involved in any way that we can, any way that makes sense.
I love the industry too, man. And, I had to pay homage to you because, we have a saying on the streets, real recognize real. So, yeah, I mean, we're probably the only two SBA YouTubers in the industry.
I think that's right.
Do you call yourself a YouTuber? I think that's...
if you do, yeah, I'll take that moniker and run with it. So
yeah, so recruiting is kind of where you've been doing. That's been the majority of your career, basically, right? Before YouTubing.
Yeah, before YouTubing, I have been mostly a headhunter, as it's called. Sometimes
yes.
It's a very tribal, kind of word, but yeah. So it's been 17 years, 18 years almost now in recruiting, mostly in the SBA sector, exclusively SBA for the last 13 years. Kind of got into the industry through a side door. I went to work for the trade group, NAGGL, that we're here for the conference.
Mm-hmm.
I was there for about 4.5 years. When you're there, you do a little bit of everything. We have like 10 staff and run something that feels like a much larger organization. So that's where I kind of got to know people in the industry, and it's a lot of the same people that are still running programs now, or it's, the next generation of those people. Lobbied, in Washington, D.C. with division managers from all around the country. And so I kind of rubbed those shoulders and then found my way into another part of the industry and started recruiting and then kind of been from there.
Yeah, it's interesting because probably a lot of people know you as the SBA Roadshow guy.
We do hear that sometimes, which is really funny. It's like, oh, you're the Roadshow guy. Okay, yeah, I am. So it's I'm still getting used to that. So you're like the Art of SBA Lending guy, right? The podcast guy.
Well, I was getting coffee today, and somebody who I met the previous day, I was like, oh, hey, nice to see you again. By the way, what do you do at the bank? And she's like, oh, I work in finance. And I was like, oh, that's kind of what I tell my friends and family what I do, because explaining it is a little harder. So I just say I'm in finance. But I was like, you can tell me I'm an SBA, lender. She's like, oh, I thought you were just a podcast host. I was like, no, I'm a BDO too. Oh. I have a day job.
So I got this from somebody that I met at your event in December who I've stayed in touch with. And they reached out to me and said, I forget how it started, but anyway, I said, well, I'm a recruiter, and I was answering a question they had about kind of employment in the market. And she was like, wait, you're a recruiter? It's like, you think I make a living making a YouTube show? Because that's not true. So it's kind of funny to kind of run into folks that don't really have any idea what you actually do day to day, and having that conversation is kind of entertaining.
Yeah, but that's okay, because honestly, I put out this content. I'm sure you do too, and I don't necessarily expect anything in return. But in hindsight, it's been like the best thing I could have done for my career.
Yeah, I couldn't agree with that more. I think as we've looked over the last 9 months or so, which I think we launched the road show a year ago at the spring conference last year. NAGGL played the first kind of trailer for us for the last 15 minutes of that conference, and that closed the conference. So shout out to NAGGL. Really appreciate them helping us kind of get in front of folks the first time. Probably fully 80-90% of the new business that we're working on, new clients that we're working with, has come because of the visibility that the roadshow created. And we didn't set out to do that. It was just like, I thought it'd be a fun thing to do. It was COVID. I was tired of not seeing people. And I like, Jerry Seinfeld's Comedians in Cars Getting Coffee. And I thought we could do that for the SBA industry. So let's go do that. And it just really viewed it, I think, as you do. It's a gift to the industry that's been really good to me, that I really love. And a way to tell the story of the impact that our industry has in a way that frankly, I don't say to be proud, but I just don't think we've been very good at telling the story of the impact this industry has. And so I wanted to try and be better at that. And hopefully more people kind of flood to that space, and it becomes more important to them to do that as well. But it certainly has not hurt the business as we've done it.
When the majority of your business is coming from that, and people see the success, and people also think it's like a really cool idea, and you would think there'd be now other people doing it, but it takes a lot of work to put that on. Tell me about the actual production side of it.
It's funny. People have been asking at the conference, when is the next season going to be? You asked me too. And the answer is, like, I know how much work it takes now. And so I'm not quite as eager to go headlong into the next season until I really feel like we've prepared and planned. We've had really good production partners from the very beginning. There's kind of a skill set that that I just don't own. And I knew if I was going to do it, we were going to have somebody. It was a heavy lift. Really, those are great storytellers. It was my job to just have the conversation with people, to ask hopefully decent questions, to get on the road and go to a place and sit, and just give people a forum to tell their stories, whether borrowers, that own a small business and have gotten an SBA loan, or an SBA lender that was involved in that process. And then, they would take an hour and 30 minutes of footage and B-roll and all these other things, and they would find the thread of the story in it and create that and turn it back around to us. So my work on the production side was really minimal. We recorded everything ourselves, me and a buddy, for the first season, iPhones and GoPros, and like that was it. It was pretty lo-fi. And then season 2, that production team hit the road with us, and they actually did everything. So, you get to set up and be a little more focused on what you're trying to accomplish in that conversation. So that was much better, but I've been fortunate to have just really solid people around me doing the hard part of the work.
So when is the next season?
Yeah, I got to get my kids back in school. So I think we're looking at early fall, September, maybe October, to hit the road again. Kind of working on the geography, have a couple of places in mind. And I think we'll probably try and film a couple of seasons worth of content in a month and just kind of knock it out. And so hopefully by the end of this year, we're launching a 3rd season. And so we're pretty excited about it. I hope people are ready to see more content from us.
Yeah, because don't you have to kind of time it with maybe like that next NAGGL conference in like October? Or?
Yeah, the hope would be that we can do some kind of an event in Colorado like we did in San Diego for a premiere, or at least to launch a trailer, or to kind of just create some buzz about the upcoming season there. So, we rented Petco in the fall last year, so I don't really know if we can raise that bar. We had so many fun partners that just really wanted to throw a great party.
I heard that was insane, and you should maybe throw a party plan. Like that could be another arm of the business, party planning.
I don't know that I want to be an event planner, but I just really love the community that exists in this sector, and that's really the thing that sort of kept me tethered to the SBA space for so long. The people are great, and they're doing good work. And when they get together, it's a pretty amazing time. And so coming out of COVID, we just wanted to do something to celebrate the industry and all the work that it had done through PPP. And, everybody's just kind of the walking wounded, just really exhausted and kind of wrung dry. And we wanted to say thank you for the work they've done and give them a place to just celebrate and enjoy each other. So it was great. I don't know. We were talking about maybe a benefit concert in Colorado.
Oh my God.
Maybe we'll get the Lumineers out. I'm jesting a little bit, but I try to not have small ideas. If you have big ideas and can't quite get to where you want to go with it, that's okay. But to kind of have small ideas, ends up doing things that just aren't very interesting to me.
Yeah.
I mean, if it's not interesting to me, I don't expect anyone else to be really interested in it. So
no, I agree. I like that. And yeah, that I missed that party, but I heard great things. Now that you're doing all this production stuff and you're filming the content and you're seeing kind of the response, I mean, how do you compare that to kind of your bread and butter of recruiting, advisory, things like that in the SBA space? Because I mean, I feel like rare that people would like and be good at both. Like, are you still recruiting or?
That's an interesting question. I think that it's really the same skill set. So when I'm sitting and asking someone about their story, in one environment, like sitting in a distillery, for a guy that bought this building with an SBA loan or with the BDO that made that loan, really it's about story. And when I'm recruiting, then I'm going to sit and talk to somebody and I'm learning about their story. I'm learning kind of what is important to them, what's been frustrating to them. It's like authors. There's an author I like, and he says, you develop a character by understanding the difference between what somebody expected and what they got.
Arc.
And yeah, it's a story arc, right? And so I can't know how to help somebody from a recruiting standpoint if I don't know who they are, if I don't have a good understanding of their experience. And, you've got to know enough about the industry too to kind of know where to guide them and where to guide them away from, right? So I just feel like I'm in my element when I'm encouraging people to tell me their story, and it's just a different way of doing that. So it's definitely still recruit. My business partner, Shane Lewis, is the best recruiter I know. And he's a great compliment because kind of where I tend to focus, sometimes I'm more strategic or kind of esoteric, creative things. He gives me the freedom to do that, but then that creates opportunities for us that then we fulfill. And we collaborate on most of the placements that we do. So it's been complimentary. And then, I mean, honestly, it doesn't hurt when you pick up the phone to call somebody the first time. If they've seen you, if they know you and have familiarity with you, it kind of plows some of that hard ground before you get there to do the work. And that's kind of been our experience with the show. So it's been a pleasant surprise. We didn't do it for those reasons. And the question I got when we started it, and I'm sure you get this too, is, well, how do you monetize this? I think that's a really stupid question to ask. Because if I'm starting something with the question of how do I monetize this, then I'm not going to create something that's interesting to me. So there's a reason I did it. I wanted to make something that I liked. I wanted to create something that I enjoyed. And then I figured if I did that, there's going to be somebody else that enjoys that. What comes after that is whatever comes after that. But I don't think you start from the end at the beginning, or you create something that's chintzy and nobody's going to care about.
Yeah, no, it's kind of like when somebody comes to me for a loan to buy a business and they're already talking about their exit.
Yeah.
I'm like, why? You can't. No, I don't like that.
Yeah, like how are you going to run this business successfully? If you can't tell me how you're going to do that you're going to sell it at a 10 times multiple in 8 years, well, you're not going to pay that loan back.
Right? I mean, yeah, if you're already thinking about the exit, I mean, I really got to question, why you're doing it in the first place. I mean, it's, going back to, can I ask you about recruiting? Like, as the industry, I don't actually know that much about the industry of recruiting.
Okay.
Like, what is recruiting?
I mean, it's pretty simple. You've got clients on the one side who they have a need to fill a role or a number of roles. And sometimes they think the issue is a people issue, but it's really a process or an operational issue. So you've kind of got to get in and diagnose the need. And
at the bank.
At the bank, yeah. And so it may be that they don't really need 3 underwriters, right? They need to implement a couple of best practices. They need to move a couple of members of the team around. So you got to kind of evaluate what they have. But at its bare kind of base is bank needs an underwriter. They don't have the network to know kind of where all the candidates are, particularly passive candidates that aren't out there just hunting around looking for a new job or haven't been laid off. That's a network that we built up over a cumulative 25 years working in the industry. They engage us. We go identify candidates that fit whatever their need is, set the interview process up, facilitate that. If they hire that candidate, then we're paid a fee as a percentage of their first year's salary and or,
Got it.
sign-on bonus or something like that. So that's in a nutshell.
So it starts kind of at the bank with a need, not necessarily at the employee level. Like, hey, I can you help me find a job? Like, it's not
I mean,
like that.
it happens that way too. So we get a lot of calls from candidates. And right now, because there's so much demand for anyone with SBA kind of skill set and talent, like if we have a qualified candidate, they're getting multiple job offers if they're trying. And it's not that we're taking them multiple places, but we tried to hire a BDO, accepted a job offer, was ready to start, came back and there was a gap there, came back and said, I've decided to go to this other bank. Well, this person had gotten 6 job offers, that's the market that we're in now. And so it's more common now for us to get a call and then to kind of help someone look at the market and know what the opportunities look like. But we're primarily assignment-based recruiters that work with loyal clients where we've got scale of opportunities. We get to know them and their business practices well enough that we can know who's going to fit there. And so then we'll take that assignment to the market and we'll talk to people about a specific opportunity. That's
okay. Yeah, I get that.
It goes both directions.
So that part makes sense, like from the bank standpoint. Hey, this is my need, and you help them figure out the need. I like that you add that advisory kind of component to it because a lot of banks, I'm sure, really appreciate that. But from the lender side, and there's a lot of lenders that watch this. So like, if I'm going to if I make the decision to leave and I want to find a job, like, how is it good to get 6 offers? Do you really need to get 6 offers?
I don't think it's good to get 6 offers. That's I think emblematic of where our industry is now. I think it's much better to be strategic and to work with someone that understands the market well enough, and not just how to ask 3 questions about somebody's credit box and go, well, they don't like 10-year paper, or $1 million unsecured is their limit, or those are kind of base level stuff. But there are things going on kind of behind the scenes and in the undercurrents of organizations. And if you're working with folks every day and talking to folks every day in the industry, you're going to know what those are. As a BDO, you're just going to have less knowledge of what's going on in other shops. And so it's hard to vet those 6 opportunities. It's better to work with somebody, like us, who you can trust that you're going to have my best interest in mind. You're going to show me 2 or maybe 3 opportunities, or maybe you're going to come back and say, look, if doing a $5 million unsecured deal is core to your ability to be successful without reinventing yourself as a BDO, then that's going to limit us. And you've got to do deals nationally. That's going to limit us really to between 3 and 5 shops that we're going to feel confident where you're going to have a good home. And so it makes the process easier. Then you're going to have a series of discussions with that person, kind of going through the nuances. And it's different for everybody. It may be that health benefits are really critical because they got a kid with a medical condition, or it may be that you got a sole breadwinner, and so the base salary really does need to be a little higher in one place, as opposed to someone who's willing to take a little lower base for more upside down the road. So there are a number of reasons that a place might fit better than another, but that's kind of the process that we would go through. So I think you just want to find a partner that understands you and is going to walk you deliberately and strategically through the evaluation process of a new opportunity.
Aren't you only going to show them opportunities that are within that 25 or whatever banks that you're actively working with?
Yeah, but if you're working with 20 or 25 top 100 national lenders and you know really well what they are, it's pretty likely that there's a good opportunity in that for you. So, I never begrudge anyone, and we don't ask a candidate to sign some kind of exclusive agreement or arrangement with us. Like, we ought to be good enough at our job that we're going to show them something that makes the most sense for them in most cases, and you stratify out what makes one shop a fit versus another shop. And so you're going to have It's like if I were a broker, I'd have access to everybody's credit boxes, right? And so I can get more stuff done. And so we try to hold a client list where the stories are compelling, but also where there's enough variety. Oh, you need a balance sheet lender. You need a fixed rate product. You're in a 504 heavy market. You need to be able to go to market with 504. Whatever those things are, we're going to have lenders that we like, that we've worked with a lot, that we know that are going to satisfy that need. And then you just, if you can get to a place where you're at 70 to 80% of what you feel is important to you and you're getting that and you like the people and the culture, I don't want to say that's the most you can hope for, but it's pretty good.
Solid, yeah.
Yeah.
So why are people leaving their jobs?
Yeah, that's a really hard question to answer, but it's happening rapidly right now. I think there's a few dynamics in the market that are contributing to it. One is they're just getting money whipped out of their jobs. I mean, and we're getting ready to do. We've done 7 industry compensation surveys going back 12 years, and we're getting ready to re-up that because we just really need fresh data given what's going on in the market now. I'll give you an example. We just hired an underwriter, fairly junior, couple of years of SBA experience, and then kind of not fully focused on SBA in her job. And this is someone that, and it's no strike against the person, very good candidate, but that's a $75,000 job 2 years ago. And that person had a couple of offers really fast and made a $100,000 base with a really nice bonus opportunity. So that's what's happening. I think the top levels of compensation in the industry are pretty, they've still gone up, but not as much. What's happened is you've got everybody that's able to work remotely right now. So that's a big driver too. You have somebody in a rural community that works for a bank that's focused on SBA, and they can afford to keep that person captive at a much lower kind of suppressed salary level. Well, now that person's a candidate for any national player in the country. And so those kind of 2 to 5 year level experienced people, they've gotten a lot closer to the top level in terms of compensation. So I think the bottom has lifted a lot and the top has moved a little. But I think people just are realizing how much money they're leaving on the table if they stay where they are. And so a lot of counter offers. If I were to talk to employers, I would say you better pay people what they're worth in the industry before they come to you to resign, because at that point it's soured, and I may stay on for a counter offer, but usually I'm leaving within 6 months of that, because now there's just some trust that's been broken there. Typically, it's kind of how that works out. The other thing I think that's happening is people are just burnt out, man. Like, it's been, in our industry, it's been an excruciatingly busy couple of years. And this will get into some other stuff that we've talked a lot about. We have not done a good job as an industry of telling the story of the industry and attracting the right people. Like, generationally, we lost a generation of talent in 08, 09, and a lot of those people didn't come back to the industry. We have not replaced. And so now we're having people that have never had in this industry to work as hard as they've had to work, and they're just tired. Some are just leaving the industry.
Really?
Some are looking for work-life balance. And part of the challenge and what we have to tell people is, like, there's not a shop that you're going to go work at that's not going to be busy. Like this is kind of what our business is now. And so it's trying to encourage people to not make a move like out of the frying pan into the fire, because, you can't hope that you're not going to be, as an underwriter, asked to turn around 6 deals a month at another shop. Because that's just pretty much the case everywhere. And you can manage it better in one shop versus another, but there's just not enough people. And so that means everybody's really busy. And I think people, a lot of them, we've kind of talked out of leaving.
I was going to ask you about that. You've actually talked people out of leaving.
Well, because the reason they're leaving is not going to be resolved by their leaving, right? And so the question is, do you feel valued? Do you feel respected where you are? Do you feel, cared for? Do you like the people that you work with? Is your work meaningful, right? If all the answers to those are yes, 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 but I'm just so tired because I'm really busy, well, then you've got to have a conversation with whoever you report to about how to mediate that. but we're not going to put you in an environment that's not busy. If that's your reason, then you need to rethink it. For us, part of that is because it's typical to take a 90-day guarantee as a recruiter. That's pretty typical in our industry, which means if I place somebody and then in day 80, they decide to go take another job, or they just walk out, or they get fired because whatever, they weren't good, or they showed up at work, stoned. I don't know what. If that happens, then I've got to either write a check back for that placement fee, or I've got to replace that candidate with another qualified candidate. Okay, so that's typical.
Can they say on like day 89, we don't like this candidate, and like fire them?
Sure.
And then you have to, has that happen?
It doesn't happen to us, and I'll tell you why. And so when I started, but yeah, that definitely is something that can happen. You don't want to work with a client that works like that. So we've been fortunate to choose client relationships of folks that we just have a mutual trust. We kind of have known who they are for a long time. Yeah, I mean, that's dirty, but it happens, right? But one of the things that we did that was different when I started the business in 2009 was I insisted on taking a 12-month guarantee on every placement that we do. So I want us to be tethered to the long-term success of that candidate, the impact that they have, and the success for the institution in a way that's meaningful.
That's what you're doing now, is 12 months?
We've done a 12-month guarantee since the very beginning.
Oh, okay.
Yeah, and so it makes me want to vet that candidate more and make sure that their reasons for leaving are really consistent with what is going to give them a better experience where they're going. Otherwise, I'm shooting myself in the foot, right? There's nothing worse than working your tail off to get a deal done and then having to refund the money for it, or have to do the job twice for one fee, So
sure.
So, I mean, those are some things that we see. And to back to your original question of why people are leaving their jobs, I think they're tired. I think also, there's a bunch of people trying to get into this industry. And so it's just kind of a frenzied environment of there's just so many people calling. I would assume you get a fair number of calls from recruiters. And maybe you take them, maybe you ignore them. Yeah. And so that's surprising to me. Most people we talk to are just getting pounded on constantly. And so it's hard to be tone deaf to that. And then if you have a bad day at the office, you're just like, well, maybe I should take this call. And then the ball gets rolling down the hill.
Well, I am pretty visible on LinkedIn, and maybe they just know that the banks aren't going to have me with all this content.
That's a fair point.
Yeah, I'm not, I'm actually not that marketable. I feel like that's why I work at a non-bank lender. Aside from money and being overworked, which I feel like everyone is, I mean, what can employers do to retain their underwriters and closers specifically that is just no-brainer stuff that you just see them mess up on a lot,
Yeah, I think there's a couple of, first of all, it's hard because it's a really competitive environment, and you could do everything right and still lose people, right? I think it starts with selection. Like, you have to know why you're hiring a certain kind of person into your company, what makes them a good fit, and the kind of person that wants to be part of the team long term, and not just go grab the first person with the skill set that's going to match what your practical needs are. I think a lot of the problem is in validation selection up front. It's companies that don't learn to tell their story the right way when they're trying to attract talent. And so I say a lot of times, money is not the reason that somebody's going to stay in a job or leave. Typically, it's not, unless they're just totally unfairly compensated for what they do. It's typically it's an issue of emotional compensation or intellectual compensation. I'm not getting something else if I'm frustrated by the way I'm being treated, or, what have you. Management style, those are the reasons people leave. And so if you're evaluating for the right things up front and you're telling your story the right way, that's going to attract the kind of person that you want in your shop. Then retention's, a different issue. And, keep management teams in place. There needs to be continuity in executive leadership, or there's not going to be continuity in the rest of the team. So that's another thing. I've got one client and they've had the same CEO, sales manager, assistant sales manager, and chief credit officer essentially for 14 years.
Wow.
And like, those people don't leave. Like, they very rarely lose an employee. But they know who they are. They built it that way, and they were cautious and selective along the way. And so what you wind up with is a team of people that are in a place on purpose, and they work well together. And that's retention. I mean, that's the way to do that.
Yeah. Thinking long-term, having a vision, finding the right culture fits, not, okay, yeah, we need an underwriter tomorrow. Let's just put an underwriter in there. Okay, good. Now we plugged that hole basically.
Yeah. For a while. Right.
Yeah, exactly. And then another one pops up.
Yeah. And it's not atypical. I mean, you see this on a resume. It's one of the things that is annoying for a recruiter to hear a hiring manager say, well, tell me about all these changes. Like, it's the easiest thing but at the same time, if somebody's made a move every 18 to 24 months, there's a trend that really does bear some explanation. But if you're so desperate to get a butt in a seat, then you shouldn't expect to keep the butt in the seat very long if that's your only, criteria for bringing somebody on board. So it takes some patience and some discipline, which is hard when you've got people raising their hand saying, we need help, we need 2 more closers on the line. And, so there's a balance. But yeah, the folks that do really good job with retention have done a really good job building a culture, knowing their identity, telling their story, and then that attracts the kind of person who's not going to leave so easily.
As you're talking, I'm just thinking, and if the wages are going up for underwriters and closers, and the premiums, a lot of banks sell, and the premiums are, I don't want to say down, but they're down from what they were.
Back, yeah.
They're normalizing and they're low. And honestly, a lot of banks are working with brokers. I mean, that's kind of my world. And broker fees are kind of pushing up too.
Yeah.
How do we see that playing out long term with these shops in terms of their profitability?
Yeah, I think that's the other issue. You've got to build a sustainable program. And so I think, and we've started brokering a handful of deals over the last year because it's an opportunity that kind of found us. And I enjoy that a lot, but I'm not beating people up to try we make 2 points on some deals. We make 1 point on other deals. And I'm focused on the execution. Are we giving the borrower a good experience? Are we getting done what they need to get done? But it's really typical to see 2 and 3 and even more, points of broker fees out there. I mean, we're hearing ridiculous amounts of money being paid. And so I guess if the premiums are at $1.18, it's only $1.14 because you're splitting that 4 with a.
Well, they're not there right now.
And they're not. It's like 110, 111 now. All of a sudden, a bank's got to rethink their model. And most of the people that have built their business model built it on an 8-point premium model because that's historically, that's what you need to bet on.
Oh, really?
Right? And so if you've come into the business more recently and you haven't been through a couple of cycles and you built a business model based on 115, 16, 17-point premium, it's not sustainable. You're going to have to change BDOs comp. You're going to have to change broker compensation. And so I think those things are going to regulate a little bit here pretty quickly. I mean, we're in this little corrective cycle and probably won't last a long time, but who knows? Maybe it's not, I don't think it's going to be an 0809 situation, but it's sort of bringing some reality back, and it will probably suppress kind of this accelerated compensation levels as well. Is my hope, because as a recruiter, I mean, it's great. We're making really, nice fees on placements that used to be a lot less because these guys are making so much more. Yeah. But it doesn't feel sustainable. It's like, well, I put hay in the barn, but don't plan on this being the case kind of forever. So, I want the program to thrive. And so I think people have to take another look at how they built those models and make sure that, and I think too, there's an opportunity to capture market share when there's a correction, right? What competition has been like for deals. You've had to pay a couple of points on a deal to get deals in the door in a lot of cases. And you're probably going to do harder deals while the economy's just rolling, right? And so what happens is you're going to see some people run for the hills who've been a little too aggressive, both in credit quality and in what they're paying to get business in the door. And so you'll see some people leave the program. Now you'll have some more SBA talented folks that are going to have to find somewhere else to work, and the things should level out somewhat before we go kind of on our next run, which hopefully won't be too long in the future. The other thing that nobody's really doing, save one shop that I'm aware of, is bringing new people into the industry who they're going to, and really bringing younger, qualified, motivated scrappers into this industry that are willing to learn and work, and telling them the story of the trajectory they can have in their career, the impact that their work can make in communities. It's a great story.
Yeah.
We should have better young people than we have, and nobody's really solving that problem. And I see some opportunity there as well.
100%, I agree. And I want to come back to that. But before I do, I want to go back to what we just said and pivot to the BDOs in terms of switching jobs. Why would a BDO leave, right? Because that's typically different reasons than underwriters and closers. Just not getting their deals done, right?
Yeah, I mean, I think credit policy can change. A lot of the frustration that we hear in BDOs is based more in kind of time of execution. And that's another like the other situations. Well, you're probably not going to go to a shop where underwriters are, not going to be 2-3 files deep on their desk. So if you're making a move because of that, then that's not a very smart move. As long as same deals are getting done, that's something we kind of have to learn to live with as cycles go. The other thing is, so you've got a rising interest rate environment now, and people feel like, well, I'm not going to be able to do fully priced commercial real estate and find deals that are consistent with the credit quality that my bank's still looking for, right? And so people get spooked, and rightfully so in a lot of cases, that maybe I need to go to a larger bank with a bigger balance sheet that's a little more flexible in what they can do to hold a deal if they need to, so we can price in a way that's competitive to can put paper on the books that's good, that we do expect to pay us back, right? So I mean that's another reason. Sales managers quit and leave. Executives move around too, and when that happens, there tend to be people that are following them that are going to be disenfranchised and are going to leave. So, I mean, there's a whole lot of reasons I think that it happens, but those are some of the more, common ones. And then I think what can happen too is there can be a lack of equity sometimes in a shop, where whether it's accurate or not, people have a feeling that this person gets this kind of treatment. I'm doing the same work, but I'm not getting this kind of treatment. So that's another thing that we hear a lot.
A lot of people have been talking about that lately. We talked about that a couple weeks ago with our guest, Greg Galla. Yeah. I may edit this out depending on your answer, but are BDOs paid too much?
Here's how I'd answer that. They're a bunch of money hungry. No, I'm joking. Yeah.
Cut.
I think some BDOs are paid too much. I think some BDOs who consistently produce $5 and $6 million are paid too much. I think that the bottom quartile of the industry, because we need talent so badly, ends up getting paid more than they're worth to stay in the bottom quartile of the industry. I think what is equitable is that a bank makes a lot of money from on the back of a good BDO, okay, and so or a non-bank lender, and what they're doing is building enterprise value for the bank. They're building a servicing asset that the BDO doesn't participate in, and so is it wrong for a BDO that does $30, $40, $50 million a year to make a high 6-figure or maybe even low 7-figure income? I don't think it is, because what they're creating and the wealth they're creating for the shareholders of that bank is significant. I think you've got to align the motivations of the kind of deals that BDOs bringing in with the way they're paid. Like if you're going to share in the upside, you got to share in the downside as well as a BDO. A good BDO is worth every penny that you got to pay for them. And I don't say that to suck up to your entire audience.
We can keep it in.
Yeah. Or maybe I did say it to suck up to your entire audience. But I mean, when the bank sells, in most cases, that BDO does not have equity in the bank. But the board does, and the CEO does, and possibly the executive of that department does. And so they're creating the value. You got to be able to share in that.
And it's the market. I mean,
and that's the other thing. If you want to have a BDO model, BDOs cost what they cost, And so if you want to have a different model, then create a different model. But and we have this. We sit down with a new client sometimes, and they're wanting to be involved in the business. And I put our compensation study in front of them. I show them the BDO page, And I did this recently, and I was with the chairman, a president, a chief credit officer, and a chief risk officer at the bank. We're sitting in their boardroom, and I pull it up on my MacBook and I turn it around, and there's just stupefied silence. The chief credit officer takes this big, deep breath, and he just kind of sinks down in his chair like this. He's like,
can I apply?
He's like, I'm doing the wrong job. And so, I'm like, guys, I'm just trying to give you a realistic understanding of what you have to, and also you're not a PLP lender. You did $10 million last year, and you're trying to engage in an industry where there's a lot of compelling stories. And so you've got to be even more willing to step up if you're going to convince someone that they need to join your team and help you build something. I mean, there's a sense in which it is what it is in terms of BDO comp. And I don't think it's going to go backwards. You know, I mean, we may take a step back in what people are making because premium shares are lower, as premiums are lower, and those sort of things.
Right.
But I think an equitable share of the wealth you're generating for other people in the bank is kind of a good way to think about BDO compensation.
Yeah, it's a sales position. It's commission based. So I think that makes sense. I think you mentioned the story a couple times, telling the story. So many banks get that wrong and don't really tell the story. I like the story. I like stories. Stories is what moves people. I feel like a lot more than numbers and stats. Like for us, we're sort of a newer SBA lender in the space, and we are trying to do things differently. That's all part of the story. And, we try to grow, right? And we hire, and you're trying to find underwriters, closers. And a lot of these folks have been doing it, not all of them, but some of them have been doing it a long time. And so they have a certain way of doing it. And we're trying to do something totally different, especially with the technology front and smart checklists and things like that, where it's literally going to change the way a closer does their job. Mm-hmm. And all you're doing is hiring from the next person down. And then there's a shortage in the industry, right? Like we need more people in the industry working in our space, correct?
Absolutely correct. Yeah. I mean, it's just a basic economics, like supply and demand issue. Like our industry, I looked at this recently, 10 years ago was doing, I think, $21 billion in volume. 5 years ago, it was 25. Last year was 36. Now, we're not on pace for 36. There was some of that has to do with the incentives, and
they're projecting 24 billion.
Yeah, and which makes sense in a year where we've got crazy inflation, we've got a rising interest rate environment. Right. Like we're taking a deep breath, but 24 billion is still a fair amount more than the industry was doing 10 years ago, and you've got so many new lenders. Patrick Kelly said it today. Where is the volume going to come from? And it's coming from fintechs and credit unions and banks that are getting involved that did PPP, and they see one opportunity to kind of grow a division here to provide that kind of non-interest fee income they got used to through PPP. So I think the demand isn't going anywhere. And once we figure out kind of where the dust settles, I mean, it's always been a counter-cyclical sector. We should not have had a $36 billion year in this industry when the economy was as white hot as it was.
Yeah, why did they do the incentives last year, not this year?
Yeah, exactly. Like this is when we need them. But what happens is conventional credit markets are going to get soft a lot faster than SBA credit markets. And so that rubber band stretches out, and now more deals are coming into SBA that we're going to be going conventional otherwise. And so we benefit from these corrective seasons after the dust settles and we kind of figure out what it looks like. So there's going to continue to be more demand for people than we've supplied with bringing new people in the industry. And Story, I think back to your point, if I go out to market and I say, here's what I need for you to be, that's not very attractive. If I go out to market and say, here's what I am, here's why we're special, here's why people love to work here, here's why they stay, well, that's different, right? Now that's something I might want to be a part of. And I think as an industry, I mean, honestly, we've done a pretty terrible job of talking about our industry, not just banks trying to hire people. And so I think we've got to find a way to bring out what really is an appealing, impactful, important industry, and to bring fresh people into it who, again, are here on purpose. And so those are some of the challenges that we've got to solve as an industry, or we're going to quickly grow obsolete because people are continuing, dude. I'm 45 next month. And when I started in the industry, I thought that I would go to the barber and have him put some gray in my hair so people would take me seriously. Right. And I've got plenty of gray hair now. So I feel like we've got to figure out a way to pump some youth into this industry and to do things differently. They learn differently. They're going to need training to teach them how to do this in a different way than we've done it. And so I don't want to say we've been lazy as an industry, but we've kind of just been asleep at the wheel for a while, and that's got to change.
I agree. I think we talked about it, honestly, probably a year ago on our podcast, because everyone wants to just hire someone who's plug and play. And now everyone's remote. So, how can you even train people? No, I'm asking you, how do you do it?
Well, no, I mean, that's the thing. Like it's not going to be a 2-day online class where I look at slides, because that's not how those people learn.
Yeah. We got to look back. How did you learn? Like I was talking to people yesterday. I was like, how are you hiring? How are you filling positions? It's always the same answer. And then I'm like, well, why can't you hire someone out of college? And I said, what if there was like a school where you can go and train for 4 months? Would you hire that person? Still no. I was like, well, how'd you learn? I was like, and they're like, oh, I was hired out of college. I was like, okay. So how did you learn? Think about that. Now, the answer is, you're in an office, you're looking over someone's shoulder and they're showing you how to do it.
Or you're walking in 10 times a day with questions and they're answering them. And if you're smart, you're learning and not asking the same question twice very often. And then you get your hands on the work. And then, I think our industry has largely just been organic, side door introduction to the industry. Nobody's gotten here on purpose,
right.
And so I think if we can flip that script and bring people here on purpose, then that's a different story. And, you're not going to go into Duke and Vanderbilt and, Ivy League, Brown and bring people into the SBA industry. But, most of us aren't. We went to a regional school somewhere. We were hard workers. We came from maybe middle white collar, blue collar family, and we hustled. We found something that, felt like important work that we were good at. And we just started doing it.
But somebody's going to have to figure it out. And if you're training someone remotely, like there's no, like our company doesn't have a physical location. There's no centralized, half the company is here. Everyone's remote. So, I mean, people are going to have to you can do it. It's possible. There is screen sharing. There's also screen recording, but you have to kind of get in the habit of thinking like, what would I be doing if I was in an office right now? It's like you kind of have to change your behavior a little bit, but it's still going to be hard. I feel like if you're not in the same room with people, I mean, there's got to be a solution for this, or else no one's going to, people weren't doing it when it was easy.
Right. Yeah. When you had people in a hub, they weren't training well. Right. And so, and what you hear a lot of people say, well, how did you learn about SBA? Well, I read the SOP front to back, and that's fine. How many 22-year-olds think are excited about reading the SOP front to back? I think you've got to figure out a way to kind of incrementalize and make training bite-sized and put it in a context that people are going to receive it as they're used to receiving information, right? And those of us who learned the old way are quickly kind of exiting the industry or kind of getting toward the end. I'm not, thankfully, hopefully, but that's happening. And so as we replace that, we've got to put it in a context that's going to make sense for how those folks learn. Yeah. And you know what? They learn remotely. Everything they gather in terms of information happens that way. And so I think about it this way. I think the first fintech that sort of figures out how to apply AI to SBA lending is going to crack the code and capture lots of market share. I've been saying that for a while, and maybe that's the case, maybe it's not. But as fintech moves forward, it's having an impact on our industry. And so, there's a way to do this. I don't know if an individual bank really has the resources to do it well. But one of the things I'm really interested in right now and doing some work on is seeing if we can figure out a way to crack that code. And to provide that kind of training, that kind of training is the wrong word even. It's mentorship. It's all of those things. That's how people learn from other people. and put that into a format that will allow us to introduce people to the sector and then let them leave 12 months of working through something like this with a skill set that gives them a start. And they know why they're here and they've got career trajectory. They love what they do, but like you can't just hand them the SOP and stick them in a couple of remote classes and expect them to be able to do this work. That's not going to work. And so we've got to be smarter about how we go about doing that. So, I mean, that's one of the opportunities that as I was on the road for the last year and just talking to people about what they're experiencing, sitting on panels, answering the questions that people have, that it just really was like a big light bulb that happened over a period of time. And so I've got a lot of interest in that, and that may be something that we're talking about more in the future.
We're gonna have to have you on again.
Yeah.
My recurring
that's
guest.
right. That's right. You and Ed McMahon.
My Don Rickles. Yeah, I'm just sick of talking about it, honestly. Like, and
I agree.
I finally have been able to do some things, and hire some people. In fact, you owe me for taking out one of your competitors.
That's right. Yeah. Yeah. I had forgotten about that. It's Andrew, right?
Yes. Yeah. So he didn't have any lending experience per se. He was a recruiter in the SBA space.
We have to start doing it somewhere. And I think you're right. Like, I'm tired of talking about it too. Because it's all we've done is talk about it. I think Live Oak does a really good job, and I'll give them kudos because they've got this, I think they call it their business asset group. It's one bank that's doing that. They have a campus and they bring them into the campus. They hire people from regional schools that feed into that. And they're, but we don't all have the scale of a Live Oak in this industry. And so we've got to figure out a way to provide some kind of similar training opportunity.
Yeah, but they've been doing that for a while.
And that's where a lot of their, underwriters, closers, salespeople have come from.
And they don't leave.
And
you know what? I have to hand it to these guys. I hate to do it. They're a competitor, but I got to hand it to them.
They know who they are. They've got a strategy for how they're going about building a business. And they're really, really consistent. They don't get off focus very much. Now, at least I don't see it. And people have been saying for a long time, well, when are they going to kind of blow up? Well, they're not, I mean, unless by blow up, you mean triple their loan volume and eat the market. They've done that, And so I think a lot of it is because of that story, of that identity. And then they've done what other people have not done to create new talent for this industry. But they're not creating it for the industry, really. They've created it for Live Oak because you're right. People stay for the most part there.
Listen, and then I'm going to let you go. But just, Baker, Lewis, what's next? Anything going on?
Yeah. One of the things that we have been putting a lot of mental energy and now some money into is just this problem we spent the last 15 minutes talking about. So I think we're going to continue to pursue what it looks like to lift the industry up by bringing new people into it. I'm not sure what our role in it is, but it's going to look less like what we've done in the past, I think. We'll continue the recruiting business. It's been really good to us. We're good at it. And it's a great business, but I think there's more to do. And I think we can serve our industry better by continuing to try and quit talking about this and start doing some things about it. So that's the big thing, I think, in front of us right now. We've got our hands in lots of different things.
Think big, right?
Yeah, that's right. Yeah.
Cool, man. Well, thank you for doing this. It's good seeing you.
Appreciate you having me out.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.